Welcome to this explainer on the invisible rules of money. For this one, I want you to imagine we're just sitting across from each other at a coffee shop, just you and me, and I'm handing you the ultimate mentor's playbook. Look, I know you're young, you're super ambitious, and you are absolutely ready to take on the world. But right now, you might feel a bit like you're running on a treadmill. Every single day, millions of people wake up, they go to their jobs, they work incredibly hard, they earn their money, they spend it, and somehow they stay broke. Why is that? Well, it's because they're playing a high-stakes game without even knowing the invisible rules. Today, we're going to change that.
There is a harsh reality we all have to face at some point, and it's this. Nobody teaches us the rules of money. It is so frustrating, isn't it? I mean, you go through years and years of school learning algebra and history, but the one thing that dictates where you live, what you eat, and how much freedom you have, it is completely left off the curriculum. Yet, these unseen rules control almost every single decision in our lives. So I just want to validate that confusion you might be feeling right now. It's really not your fault that the system is confusing, but it is your responsibility to figure it out. So today, I'm going to pull back the curtain on the financial system that quietly runs the world. And I promise you, once you understand these rules, you will literally never look at money the same way again.
All right, let's jump right into Section 1, the illusion of money. To really understand money, we have to look at why it even exists in the first place. Thousands of years ago, money just wasn't a thing. People started out by bartering. You traded your chickens for vegetables, your shoes for wheat, maybe some milk for firewood. And honestly, it worked beautifully, right up until you needed a new pair of shoes, but the cobbler definitely did not want your raw, unplucked chickens. That logistical nightmare is the exact reason humans invented money. Money was just a clever tool invented to solve a massive trading problem. It evolved from physical coins and paper into the digital, electronic payments we use today with just a simple tap of our phones. But here is the hard truth you need to grasp right now. Money itself isn't wealth. Money is essentially just trust. It's a simple agreement built entirely on collective trust that a piece of paper or, a glowing number on your banking app represents actual value. Without that shared trust, that paper or that digital number is completely 100% worthless. Keep that in mind as you start building your life. You aren't trying to accumulate pieces of paper. You're trying to accumulate actual value.
Moving on to Section 2, the invisible wealth eaters. Picture this scenario for a second. You spend 30 days climbing this grueling, steep mountain. You put in the blood, the sweat, the literal tears. You finally reach the top, and you are handed your reward, a $3,000 paycheck. You feel that immense pride of earning it. But instantly, like before you can even pop a bottle to celebrate, invisible hands start shrinking it. Pieces just start getting pulled away.
The first of those invisible hands, taxes. Now, when you get those first real paychecks, it feels like someone is just outright stealing a chunk of your hard-earned reward. But governments collect money from workers, businesses, investors, and shoppers for a reason. While it can be deeply, deeply frustrating to see your money disappear, these taxes are the necessary fuel that keeps a functioning country alive. Without them, we literally have no paved roads, no public hospitals, no emergency services showing up when you call. It's just an unavoidable rule of the game.
So the really crucial point here is understanding where your remaining money actually goes. A lot of people think banks are just these giant, super secure vaults that protect your cash. Actually, banks make their money by moving your money. Your deposited cash is not just sitting in a vault waiting for you to come back. It flows underground, right out into the economy. Your money becomes someone else's house mortgage. It becomes someone else's small business loan. It funds someone else's dream. Sure, your screen still shows the same balance, but your actual cash is out in the world working for the bank. The whole financial system runs almost entirely on that exact trust we talked about earlier.
And that brings us to the stealthiest, most dangerous invisible eater of them all, inflation. Imagine you earn the exact same steady salary for 10 straight years. Sounds safe, right? Sounds perfectly stable, until you wake up a decade later and realize literally everything around you has become twice as expensive. Inflation is a thief, but it doesn't steal your money directly. No. It steals what your money can buy. This is exactly why simply saving cash under a mattress or letting it sit in a basic savings account actually makes you poorer over time.
Which brings us to Section 3, the double-edged swords.
Think of interest like financial gravity. It is a tiny snowball rolling downhill today that becomes an absolutely massive avalanche tomorrow. If you borrow money, that avalanche of interest works against you, basically crushing your future income. But if you invest money, that same avalanche works for you. It is the exact same mathematical force, but it creates either bankruptcies or millionaires. The difference is simply which side of the equation you choose to stand on.
And this transitions perfectly into how we need to view debt. Debt itself isn't evil. Bad debt is evil. Bad debt is consumer credit, these invisible chains that buy you a hit of temporary happiness today, like a massive new TV or a designer jacket, but end up creating years of stress and monthly payments tomorrow. Good debt, on the other hand, is a tool. The wealthy actually use good debt to buy a business or acquire income-producing assets that ultimately create more wealth.
Because of how all this debt works, you're going to hear a lot about your credit score as you get older. But I want you to completely reframe what you think this number actually means. A credit score does not measure how rich you are. It doesn't measure your actual wealth at all. It is quite simply a grade of how much the banking system trusts you. When they look at your score, banks are basically just asking one simple question. If we lend this person money, will they return it? That is the whole shebang. It's a metric of reliability, not riches.
So, if simply working hard only earns money and inflation is constantly nibbling away at it behind the scenes, how do the truly wealthy actually grow it?
Let's get into Section 4, playing the real game.
We need to completely dispel the myth right now that the richest people simply work harder than everyone else. Working earns money. Yes, absolutely. But investing grows money. Think about it. If you only ever trade your hours for a paycheck, you are severely capped by the simple fact that there are only 24 hours in the day. The wealthy deeply understand this limitation, which is why they focus their energy on acquiring assets instead.
So what is an asset? An asset is something that works every single second, even while you sleep. Think of it like planting small seeds that grow into giant trees, but instead of growing leaves, they grow coins. It's money creating more money. When you have assets generating income completely independent of your own physical labor, congratulations, you have finally tapped into the real game of wealth building.
All right, on to our final part, Section 5. Your ultimate asset is time.
This is honestly the mentor's heaviest truth right here. To truly understand time, you first have to understand value. People do not pay for products, they pay for value. And value depends entirely on context. For example, a simple bottle of water costs almost nothing at your local grocery store. But if you are lost in the middle of a scorching desert, well, that exact same bottle of water suddenly becomes priceless. The value changes based entirely on the situation you're in.
Well, time works exactly the same way as value. Every single hour you waste today is an investment you will never, ever recover. The people who become truly wealthy realize this very early on. That is exactly why they protect their time much, much more fiercely than they protect their bank accounts. You can always go out and earn another dollar, but you can never, ever earn another hour. You've got to stop trading your priceless time for things that don't add value to your life.
As we wrap up this explainer, I really want to leave you with this final, powerful thought. Money isn't magic. It isn't just dumb luck. It follows rules. And the earlier you learn those rules, the easier your entire life becomes. As the saying goes, financial freedom doesn't begin when you earn more. It begins when you finally understand how money actually works. Well, you now know the rules of the game. So, the only question left to ask yourself tonight is this. Are you going to keep running on the treadmill tomorrow, or are you finally going to start planting your seeds?